for traders. This is Rob Reinhold. I'm joined by Ankit Sharma. And as always, this is the weekly Currency Room. And wow, what a week. I mean, this week was absolutely bananas. So we had the first part of the week, which was actually pretty mellow. We had an up day, a down day, an up day. And then really all the fireworks came on Thursday. We had a major rally. We had the NASDAQ up 7%, the S&P up 5%. I mean, just huge runs. And we had the dollar absolutely get crushed this week, down 3.5%. And Ankit told me it was the biggest weekly drop in the dollar since 2020, right after the pandemic. Let's jump into the calendar. But before we jump into the calendar, we've got to talk crypto, because that was actually even one of the bigger stories last week. So I know the CPI report was a big deal, but the cryptos, wow, had a really crazy thing happen. FTX, which is the second largest trading platform and broker, they basically said we're out of money, and they halted withdrawals. Now, I talked about this on Tuesday in my daily roundup, and I talked about how once a broker halts withdrawals, what it means is like when a bank halts withdrawals. If you have $1,000 in the bank and you go to the bank and they've halted withdrawals, you can get $0 out of the bank. Even though you have money, the bank's not going to give it to you.
What do you mean the bank is out of money?
Insolvent? You only have enough cash for the next 3 customers!
And if that bank just goes out of business, you could potentially lose your money. So this is a big deal. When someone halts those things, it sets off a panic. And so what happened was everyone across the crypto world started looking at their brokerage and saying, oh my gosh, what if it's not safe? The only way to get your money out of it is to sell your coins off and make a transfer to like a regular bank account. And that's what happened. We saw cryptos get absolutely crushed. And then Binance was in a deal to buy FTX. That fell apart to save the brokerage. And at the end of the week, they basically said, we're done. We're filing for bankruptcy. That is going to have some big ramifications on crypto and really the rest of the marketplace. And we'll talk more about that. We take a look at what happened on the week. We didn't really have much last week except for the CPI report. Now, look, we covered the CPI report quite a bit last week. I'll just go over kind of the headlines. Numbers were supposed to be plus 0.6, came out at plus 0.4. Core up 0.5, it came in at 0.3. This is a big deal. So this is telling the Fed that the economy is slowing down. Inflation is no longer as hot as it was. This is just one report. Things could easily change next month, but at least for an entire month, the market gets to play with the idea that inflation has peaked and that's the worst it's going to get. I don't think you can be really hawkish on inflation until the next CPI report, which is going to be in the middle of December. What do you think about that, Ankit?
Oh, absolutely. I think the next 30 days is where the markets have this sweet spot. I'm sure in between we will hear from some Fed speakers, and I'm sure they will try to talk this market down. And I think that's what really I got from that last meeting. Fed doesn't really want this market rally, but at the same time, we are seeing this expectation getting built up. And again, this kind of reminds me of what happened back in September or back in August. Like we have this periods where the market is going to get ahead of itself and try to take the opposite side of the Fed. So I think this is where from here on we'll probably have this expectation. And then again, next month will be again a bigger key as well. We have heard from Fed before. They want to see not just one report from more than one report, but I think markets are getting definitely more excited than what I would have anticipated. But I think the next few weeks are definitely seems to be a bit more easier as far as the worries goes in the markets.
Absolutely. You can see the returns this week. Outside of crypto, it was a very strong week for risk-on assets. See the S&P up 5.6%. That came really on the last 2 days. The world index, even a little stronger. We're going to be meeting with our stock and options group after this, and I really like international stocks here. I think international stocks have been hammered by the strong dollar. And if this dollar stays down and gets even a little weaker, boy, I think there's a lot of upside in international emerging market stocks. Gold was up. That's going to help commodity-based currencies and commodity-based economies. Overall, again, I think the market has a couple weeks of bullishness until we maybe get another bad CPI report. And this all shows up in the charts. So whenever you have these, again, these premises, or we're talking right now, and we call this cocktail talk at Maverick, meaning it's fun to talk about, but unless the chart is showing you something, it's just cocktail talk, meaning it's best over a couple of drinks with your friends. There should be no trading done on cocktail talk. The trading should be done on the charts. And technical analysis says, okay, we just broke out of 39.20. That was where the last resistance was. The next bit of resistance isn't until about 4,100. So here we are, we broke through. Now look, I don't think we're going to go straight up there without any checks, but I think we could get some movements in here. But I think we are going to be moving up to this area. So for the next 3 weeks, and we also have holiday shortened weeks in this next month, those generally tend to be bullish more than bearish. I think this market wants to work its way higher. So the S&P is saying it wants to go higher over the next couple weeks. Let's check in on the performance of cryptos because it was just nasty. It was ugly. And you can see that the best you could hope for is down 10%. Coins like Solana that were tied to FTX's coin, they went down about 50% for the week. So really nasty week in cryptos. We're going to talk about cryptos. I think cryptos are still something to avoid. And I think that you need to be very cautious over the next week or two until everything settles out, the panic is gone. Then I think you can go back in and pick up some things. Take a look at what happened here. We got dollar dropping 3.7%. Big drop. Now take a look at the drop in CAD. That was all because of the dollar. Remember, the dollar and the CAD have been tied together recently with a high correlation. And so you can't look at this and think anything about the CAD. This is a 100% story about the dollar. And then on the other side, we had yen and Swiss franc jump higher. Nothing else happened on the week. Take a look at euro, pound, Aussie, Kiwi. They're all flat. So we had this really crazy movement between 3 risk-off currencies. And on a risk-on week, 2 of them went up, 1 went down. We were just talking earlier together, and Ankit, you said exactly what I said. I can't explain exactly what happened. I mean, how do you feel about this story right here? Big risk-on week, and 2 risk-off currencies, the yen and the Swiss franc, shot up. What do you think about it?
Yeah, like this is definitely surprising. I mean, if I had to really make a call, I would have, seen, just like last week, we've seen, the dollar actually did really well against the Aussie and even Kiwi, I would say. They were all setting up nicely. I mean, Kiwi has had a good positive score for the past 2-3 weeks. So the stage was there for that to run. And I just find that very surprising. So if I had to really be hunting for these movements in these crosses, I think, the dollar Swiss franc would not be the first currency pair that would come to my mind, especially take a look at the divergence between the euro and the Swiss franc too. So yeah, really weird week. And I know I had traders that were actually kind of confused with that too. And then again, a lot of times markets just don't give you an answer. Like, this is what it is, and you just have to kind of take that and then go from there. So I think maybe there's a lag. I don't know. We'll see that catch up next week. But yeah, this week, it's really concentrated into 3 of these currencies, especially that dollar yen. I think that biggest unwinding that's taking place is in the dollar yen. We didn't see a big move in the dollar yen pair on the yen intermission, but we had this big movement on this unwinding in the dollar. So I think that will be the story next week, as we are now unwinding a lot of these big moves that have taken place earlier this year.
We have a very famous saying here at Maverick that you need to trade the market in front of you. This chart right here is telling you where the market is right now. If you say to yourself, well, I'm going to trade Kiwi and Aussie next week. Why? It's telling you they're not in play. What's in play right now is dollar, yen, Swiss franc, and it's clear as day. So let's take a look at where the markets are, the broad markets, and then we're going to get into individual currencies. We already took a look at the S&P and said that was bullish. Here we are. This is international stocks, and you can see they're even stronger. They broke out and really had a run And we do have some resistance up here. So we're closer to resistance on international, but it's telling us that it's strongest. It's the strongest of all of the markets here. This is not translating over into strong Aussie, strong Kiwi like it usually does. So that you should take note about. When something should happen and it doesn't, it tells you the market is right. You could have all the reasons why you don't think it's right, but the market is telling you right now risk on assets aren't getting any money. Here's crypto, and I talked about this on Tuesday. I said, hey, look, when markets go into panic, technicals no longer matter. A chart no longer matters. You think things are trading off of a chart right now in the world of crypto? No. When people are worried about saving their money, support and moving average lines don't hold up. You saw that in March of 2020. Every single technical analysis indicator you could have pulled out in March of 2020 got shattered and broken. I mean, we had oil go under $0 a barrel. Like I said, all the things you thought could never happen, they happened. And so when you get these panics, it's best just to say, right now it is so erratic, there is no logic or reason. There's no reason to trade cryptos here. Let's take a look at the calendar this week. We've got claimant count change in the UK, so their employment report. They had a bad GDP report last week, and the overall UK economy isn't great at the moment. We will get a delayed PPI report out of the US. So look, this is the one report this week I think that might shake people up. If the PPI comes out stronger than expected, it's going to cause people to take back some of their bullishness that they just spent this week. Other than that, we've got lots of other inflation data, CPI out of the UK and out of Canada on Wednesday. And then just some minor reports, Aussie employment change on Wednesday night. But that's about it. I think there's going to be some decent moves this week, but I can't really point to one of these announcements and say, hey, this is the one I want to trade. I think they're all going to be decent setups. So this week, I think the equity markets are likely going to consolidate these recent gains and probably move a little bit higher. I know there's going to be a lot of people that said, Rob, markets bounced 7% in 1 week. I'm going to short it. I don't think that's the play here. I think that if you want to take a look at shorting, I think you sit these couple weeks out, let the market do its thing, come back in December. That's when I think is a better time to be short, because all lights are green right now for equities to go higher. We don't have anything from central banks this week, and we covered the economic reports of importance. So let's jump into the currencies one by one. And I'm going to go through these cryptos super fast because I'm just going to say this. We could give them scores, and we are giving them scores. Bitcoin is a -2, -1. Guess what? I have no faith behind those numbers. Ankit, do you look at these on a technical matter and say, oh, I should do this or this on technicals here?
I mean, absolutely not. I mean, we've seen this, where the movements that happen, there's not a whole lot of lines you can draw and say, well, these are orderly moves. These are not orderly moves. There's panics that are setting in there. And again, usually when the emotions are running high, markets don't really care for those support and resistance levels. So I think that's kind of a takeaway from what's going on. And I think there could be a lot more ripple down effects coming in the next few days about this whole the collapse that are happening in these unregulated the brokerages. So I think right now the emotions are what's really have a hold on these crypto markets.
While we're here on the charts, as we've been pretty clear, avoid these. We are going to be getting ready for when these things all settle out. And what we want to do is we want to watch all of them and see which one was the strongest. And Litecoin is by far the strongest performer this week. It is the only one that's still above its moving averages. It had the smallest decline, and actually it's at a 0 and a 0. So I'm not looking to buy Litecoin at all this week, or probably the next, but I am going to be watching relative strength and weakness for when it is the time to buy them. I want to make sure that I'm buying the best one. Let's take a look at Forex. And again, I'm going to echo what I said earlier. The market is telling us where the volatility is. It's in dollar, yen, and Swiss franc. That's where the volatility is right now. So I think you want to be playing these pairs. That being said, These pairs are going to be the largest movements. So you do have to really pick your entry points. So we have this huge collapse in dollar. Dollar down 3.5%, 3.7% for the week on the basket. Okay, we had two big expanded range candles. We have to expect that there's going to be some bounce here or a base. I don't think you can just start shorting dollar first thing on Sunday this week. I think you've got to wait. So for dollar, I'm looking for a bounce or a rally to short into, or a base to short into when it breaks down. I think we just have the exact opposite situation on the yen here. Yen has had two big candles up. At this point, we're running into some overhead resistance. I can't chase it early on in the week, but what I can do is let it come down, let it bottom out, and be long yen against the dollar. Take a look at the Swiss franc next. Swiss franc is actually looking a little bit better on the chart. We are running into a little bit of resistance here, but take a look at the chart on Friday in this candle, and we can compare that to the chart and candle on the yen. We can see that the Swiss franc had a much stronger close on Friday than the yen. So I'm going to put Swiss franc at the top of the list. That being said, I'm not going to be chasing this thing first part of the week. I would really like to see a base and a breakout later in the week. A pullback I could buy into. That's what I'm really looking for. So these three pairs, this is where all of my focus is going to be. I'm going to run through the rest, but I'm going to show you that there's really not a whole lot going on. Here's the euro. We are at a 0 trend score, and we are at a 0 velocity score. Whenever I get that, I say, I'm going to put you on the shelf. I'll check back in on you when you decide to go somewhere. Here we have the pound. We have a 0 and a 0. It's simply not going anywhere. The range over the past week on the pound has been extremely tight. There's been no opportunity to make any sort of serious money on it. So, pound goes on the shelf. CAD here has broken out. What I said earlier, I'm going to say it again. This isn't the CAD doing what the CAD is doing. This is the strings of correlation tied with the dollar that has simply pulled the CAD down. When something is just being led around on a leash, you don't want to trade the thing that's being led around on the leash. Trade the thing that's leading it. So I don't think the CAD here is a trade. I think the dollar's the trade. And whatever the dollar does, the CAD is simply going to do the same thing. Is that what you're seeing on CAD, Ankit?
Yeah, I mean, absolutely. I mean, we've seen the CAD has not really, traded on its own. So I think if you look at the movements, there's definitely better movements in the dollar. The only point I would say the dollar CAD would look a bit better if the dollar start to bounce and CAD doesn't. I think that would be a signal. I mean, I've been waiting for this CAD basket to kind of break out one way or the other. So we have the breakout. But I think what you really need to pay attention to is that dollar CAD currency pair. Because, I mean, take a look at right now. A day like today, dollar CAD is only down, 0.5%, where everything else is down 1.5 to 2. So I think that's really what we need to pay attention to. But when they are doing the very similar thing, then it's better to go with the dollar over the CAD. So I think that's my outlook, and I have to kind of wait and see what happens next week. I mean, with this big move in the dollar and the CAD, I mean, we are expecting some consolidation and bounces, but I think we'll see which one, what follows which one. And I think if the CAD takes a lead, then we know that the CAD is likely to not be as weak as the dollar. So I think I'm really paying attention to what the dollar and CAD's going to do next week.
We'll take a look at that cross here in just a second. Moving into the Aussie and Kiwi, you can see here, Aussie is at a 0. Short term, it's got a little bit of momentum to the upside, but until we break out above a 50-day moving average on a daily, I'm just not interested whatsoever. So Aussie is also on the shelf. And then I come over here to Kiwi, and Kiwi looks okay. Because look, it is trending. The problem is it's been in a base for the last 7 days. So I don't want to be buying it in here. It's a very frustrating trade to buy something as it's basing for a week or two. Once we can move out of this range, if the Kiwi can move out of this resistance here on the basket, I'm very happy to be long Kiwi. And because it will really mirror what I look for in the overall markets where it's a bullish market. And Kiwi typically does well in bullish markets. But I have to wait until I see the proof. So if we stack them all up, here's the trends. Here's what's trending. Cryptos are lower, except for Litecoin. A whole bunch of stuff is neutral, and we've got yen, Swiss franc, and Kiwi trending. Again, the trends are something a little bit longer term. Velocity score is what is moving right now. And if we take a look at what is moving right now, we can see the dollar and CAD are moving lower, and yen, Swiss franc are moving higher, and we got Aussie Kiwi in the mix as well. Everything else, pound and euro, there is no reason at all to look at these whatsoever. So here's the breakdown. I think this week, Swiss franc and yen, not at the first part of the week, against the dollar is the play. I am waiting for that Kiwi to show me that it wants to actually break out and go higher. Once it does that, I would throw away Swiss franc and yen, and I'd much rather be long Kiwi against something like the dollar or the CAD. But let's go ahead and pair all of those up and see if we can find any possible entry points. First one I want to take a look at is dollar yen. So here's dollar yen. Let me get here on a 4-hour chart. So we've had this huge fall. Now, one of the things I used to do as a younger trader is I would take a look at this and say like, oh my gosh, it's gone so much. It can't go down anymore. I couldn't tell you how many times I was wrong that it could go down more. So after 25 years of doing this, I'm looking at this saying, okay, the trend is very clear. This is likely going down more. But where is my best entry? So do you see the difference? The first one was it's gone down so much, I'm not going to look for an entry because I think it's going to bounce back. And my earlier self would even like try to buy these things because they've gone down so much and they have to bounce now. Okay, you got a one little bounce here for 4 hours. Is that what you're trying to catch before it gets slammed again? This is really what we're waiting for. What happened here of just a little period where we had a little bit of bullishness to where you could then get a place where it wasn't like heavily oversold. And you could get in at a point where then you could say, okay, I'm not just chasing it. I'm not just chasing this. I waited for a rally. I took a position on the rally. Now you can get that big fall. That's all I'm waiting for on dollar yen. Right here, right now, it's not there. It's likely to continue to just moving lower. I am very patient in waiting for low bases and bear rallies. Let's check in on dollar Swiss franc. Same thing. When we go out to a 4-hour chart, huge fall, huge fall. A lot of traders saw this move that happened right after the report. These 3 candles right here. And you said, oh my gosh, it's already gone down so much. Maybe I should buy it, which was wrong, or I can't sell it short because it's already gone down so much. Now look, you can't just chase things. But what you can do is you can say, oh my gosh, I've identified the weakest one out there. I just need to make sure I'm not being an idiot and just clicking a button for no reason. I need to follow trading rules and trading systems. And you can see you had a nice short entry here at 96. I mean, that is a 2% fall from there. All I'm looking for is the same thing. I'm looking for a little rally to enter into. Someone could have entered right here off this little rally. That would have been absolutely acceptable. Off of this little rally, acceptable as well. This is all I'm looking for on these pairs. So that's why I said the first part of the week, I don't think it's there. I think it's going to be more likely like Tuesday, Wednesday. Now, whenever you have a question of which pair should I do, dollar yen or dollar Swiss franc, it's easy. You just simply pair up the 2 recessive ones. This is Swiss franc yen. And the question is, okay, would you rather be long or short this currency? And if you answer this question, you know which is the correct one to look at. And I'm looking at this and I literally can't answer this because we've got, basically we are exactly where we were about a week ago. We had a little bit of relative strength here in Swiss franc, and then we had a relative weakness in Swiss franc. We just had this big bounce at the bottom. We're right in the trading range. I mean, okay, do you have a call here on which one you prefer, Swiss franc or yen?
Well, personally, I don't. I mean, I think where I am right now, I think the early part of the week, I want to just see what happens. whenever I see these big expanded candles and big movements that have already taken place, we need to see things consolidate a little bit. The same way as we saw in some of the setups, we have consolidation of some bear rallies. So I think early on, like Swiss franc, I'm not really have a strong call on because, we were at -2 just last week. So this is the first week where the Swiss franc has really jumped up. So, I think this next week, I just don't have a strong call because, based on what we have seen so far, I think we could see some consolidation. And in that case, I'd rather just sit out and just see what happens. And if there's some retracements, I'm sure there will be some good trades off of that. But I don't want to get here right now and talk about retracements because, those are all those counter trend movements that gets in trouble. So I think early on, we'll just have to kind of wait and see what happens and then kind of move on from there.
Hey, will you break down what you're seeing in dollar CAD here?
Dollar CAD, you can see like we are breaking. That 133, 132 was like the big breakout, and I think we are already getting down towards that point. So I think this is definitely it's in the process of testing that prior breakout point, and I think that's where it'll likely to find some support, or 131. I think we could go down a little bit more. But yeah, these are the two currencies that. Are kind of moving in tandem, but in between they will have its moments where one is performing better than the other. But I think overall, we can see that the CAD has been the better one compared to the dollar. But I think that has to kind of come to a test before it changes its direction. But like I said, if the dollar CAD bounces back and and everything else doesn't kind of follow the suit, then that tells me that the Canadian dollar might have a little bit more weakness. I just want to remind everyone that Canadian dollar has been one of the best currencies throughout the 2022. And if you compare to Rob, you want to pull up Kiwi CAD. Just to give a comparison here, a currency pair like this, you can see we are turning corners, not just in the Kiwi, but against the CAD as well. So I think the broader theme right now is if this reversal continues, then we'll probably see the CAD pairs off and the dollar pairs off. So I think at that point, it's just a matter of which currency you want to pick and what time frame you want to pick. I know the CAD, the Kiwi and the CAD Aussie hasn't really taken part of it, but I think if they start to jump into the move, I think pairing these against Kiwi CAD and Aussie CAD seems like a nice play too, because they are finally breaking out and they're above the moving averages. So I think this move then can continue in some of the other non-traditional places that you might not be looking at, but they might be the more stable ones.
Okay, while we're on this chart, I really like this chart. It's one of the ones I was going to be looking at later in the week, Kiwi CAD. What do you see on an entry here on Kiwi CAD?
I would like to see that kind of test. I know we have broken out, which is a good sign. So what we want to see is we either want to see a bit of a pullback or base. Not always we see a whole breakout and then retest that breakout. So the higher it holds, the better it is. The lower it gets, it's still a good technical pattern because we still, as long as the prior resistance and now the support stays intact, I think this could have a nice little opportunity for the upside. But again, CAD is also one of the biggest mover today. So I think if we start to see some pairing next week early on, then I think we can have a nice opportunity off that little correction in the CAD.
My favorite trade of the week is waiting for that Kiwi to finally show that it wants to go. And I think you're right. I think pairing it up against the CAD, against the dollar, anything that's weak at the time is the play. However, until that Kiwi shows strength, I'm playing in dollar yen and dollar Swiss franc, and I will just follow the moves there as they go. Let's wrap this up. Markets are turning bullish. Now, I want to be clear here. I did not say markets are in a bull market. I'm saying is markets are bullish at the moment, meaning there's more people wanting to go long than short. That is bullish. A bull market is a sustained period of time where there's an overall bit of optimism in the markets. That's not where we are here. We are just here on a bounce. That's where we are in the middle of this long-term bear market we've seen all of 2022. I think we have a really nice window until the December CPI report, where we have to worry again about inflation. So I think we got a little 3-week window here where the markets can continue to be more bullish and bearish. Other than that, I think you just follow the charts, follow the relative strength in the currency market, avoid the things that aren't moving, and play the things that are. That is the key all the time in Forex. Thanks for joining us. Everyone have a great weekend. Goodbye, everybody.